Good evening. This is the Elliott wave update for the S&P 500 for Tuesday, July 26, 2022. The S&P for the most part of the day traded very slow, very sluggish, sudden bursts higher, sudden bursts lower, lack of follow through on light volume. The general trend though for the day was down, and that changed a little bit once earnings came out this afternoon from Google and from Microsoft. Now, initially, both missed estimates, both had their reasons. And then we stopped, trading stopped at 5 p.m., as it always does every day, reopens at 6 in Globex. That gave an hour to go listen to the conference calls and to pick up additional information. And on the reopen, Microsoft's now up $15 instead of being down 2 or 3 off of the close. Close at almost 252, now trading at 266, so it's $14. So, and also Google closed at 105 is now trading 110, almost 111. So here we go. Now, what did I do today? Even though we had this slow day, even though I believe that the markets has not necessarily within the S&P broken below levels that it shouldn't, it did break below the 50-day moving average. And what I'm going to do is kind of just fill in my blank and then I'll break it down. I did put in the completion point for the minor wave 4, and that was at the high at 4,016. Now, so that's where the C wave completed and then the minor wave 4. And I did that based on the fact that it broke a couple of levels. And within the NASDAQ, it broke some price support levels within the structure, which gave greater strength to the structure being complete. Like for example, this is A and that's the B, and then we did the C wave. Now, not the same total story here in the S&P. I cannot imagine one going without the other in terms of a direction and that direction being up. So again, as I said, this is not cast in stone. Going into tomorrow, on an Elliott wave basis, we still now need to leave open the potential that this market can turn right on its heels, right on a tick, as I say, and rally itself back to 4,000 in a massive get out of my way. And that would be all before the Fed comes out at 2 o'clock to tell us what they want to do. But you now see that news-wise, you got CNBC now putting out on the air, Fed's only likely going to raise 75 basis points in there. That's already factored in the market. Don't even bother. We're just going up. Okay. So again, I am not going to attach a bullish or bearish tone onto anything that's being said by CNBC or any of the news, period, because it turns into we trade the number. That's what we do. We trade the number. They're going to come after and cover these shorts anyway. And likely, I said in my NASDAQ update, and I'll say it again here for the S&P, we must leave open. And I made the NASDAQ before Globex reopened. We must leave open the potential that the market can turn and break back above here and the 4 gets moved up. Does not mean that we've all turned bullish. I don't really care. I don't care about the bullish and bearish. What I care about is the levels where value, supply and demand, etc. That's going to teach me and take me where I need to be without pinning bullish or bearish on anything. We trade the price action. That's what's going to be important. So, what can I expect for tomorrow? Well, there's still a lot of trading to be done. What starts out sometimes does not always end up that way. Once the rest of the world gets adrift on it, once more other position traders or whatever comes in and they go with it, plus what other news may or may not come out. So what do we have for tomorrow? Well, let me drop down to that 4-hour chart. Let's open this up and let's take a look. Now, I can open it this way. Yep, I'm going to do that. What we got going on is still a market that has flipped back above that 50. Now, it actually, let me just do this. It actually had come down and then broken the 50 EMA and then slid that first tick after the market closed, dropped it below the 50 SMA. But within the next tick, it was jamming itself up to 39.40. So it dropped down to 39.12 and jumped back up to 39.40. Now that, believe it or not, folks, is part of a V bottom that I always talk about, but totally in the wrong place. But guess what it looked? It's left 3 down. It's left 3 down. So that's still, even though it's kind of come in real close to that one, it didn't break it. It did not break it. On an Elliott basis, I'm going to have to let that still be a 1, 2, 3, 4, and we got a 5. Crazy as that sounds. And that's after me putting the C in the 4. Then I get this. But that's why you leave that potential. Now, what goes with that would be understanding where supply and demand is going to take it. Supply and demand right now, you got 2 stocks kind of running higher. And that's pulling them into here. And it's pulling into the cover shorts. And or get flat. So again, I don't want to make any statements on like, oh, they're turning bullish. I don't really care what they're turning. They're buying, they're selling, and so somebody's found value. Let's look at it that way. Markets will trade to value because that's where the buyer and the seller can meet and actually exchange money. I buy from you, you sell to me, you get my money, I get the shares. So we need to work on the premise of where the value is going to be determined and placed. Moving averages help us out with that as well because they help us with direction. So here we are on the 4-hour chart. Could be ABC, could be 1, 2, 3, but can't because you see it's already come back above. 4 cannot overlap 1. So it's left us in a kind of a precarious position that this thing needs to just pick up and roll out of here. And it may. And if it doesn't and it comes back down, I will figure it out. But then it's just a continuation, and then the 4 stays there, and then we're coming off. Now, if it's going to continue to come off, it's going to do it at the same speed it just went up. So that means that all of this has got to change, and we start breaking back below that 50. We break below the 200. We break below the SMA 200, 38.44. The EMA 200, 39.04. The other two, and I've added that. So I've changed that. I need to tell you guys that put them the same color. So the 200s are the same color. One's a dash, one's a solid. The 50s are the same color. One's a dash, one's a solid. So the dashes are SMAs, simple moving average, and the solid are EMAs. So based on that, and then the 4-hour chart, we've come back up and we're now sitting, we got above that 20. We're now just back below that 20. We need to continue to break there. We need to break 39.65. We need to break 39.78, 39.92, and on up above 4,000. Can it do that? Sure. And basically, very short order, it has gone from that low to that high. This low was at 4 o'clock. This high is at 6 o'clock. So, and there was an hour break. So, it doesn't take very long for the market to just kind of turn itself around and they'll jump in on 1, 2 earnings reports. So now, other things also happened. So we're going to wait. Tomorrow's the Fed. We're going to wait. So downside, yes. Wave 5, if it definitely is in play, is going to unfold in 5 waves of minute degree. And this could just be part of minute 1, the very beginning. It could be all part of the minute C wave. So it could be a wave 4 of C. We got those things going on. It will be resolved. The market will do it. The market will do it. So coming off, we're going to start breaking all of these. We're going to break 38.12. We're going to break below 37.20. Again, do we have things tomorrow that could do that? Could drop this index 200 points? Yes, depending on how severe what the Fed actually does do or doesn't do. So there are things still out there that could shift market sentiment and market mood. So let's just kind of stay open on all of this. And eventually in this minor 5th wave, I would be looking for this market again to come all the way back down to here. And what I can do now, and what I will do, I think I did do, and I've got it, yeah. I ran the extensions for minor 5. And what we got is still 32.25. And if minor 5 is equal to minor 3, then we got 31.51. If minor 5 is 62% of minor 3, then we have 34.82. And then 70.5 and all the way down. So again, this matches up with the primary A down to here, because that's essentially what this minor 5th wave will be then completing the intermediate C wave. And that in turn will complete the primary A wave and set the stage for a kick butt multi-month counter-trend rally. So again, jumping in because you think that this ended it still might be the case. My particular view of what things are forming does not support that. But I'll tell you, this could be 1, this could be 2, and now we're just going to go zipping in a 3rd. And this will end up being, this the start of an ABC up. I still do not feel that that's the case, but it can. And until I see additional breakdown, which I started to see today, then basically this has to be an internal 4 within this wave. And we're going to go up to finish it. And then we'll see. But in any case, a break higher, I would anticipate a break back above 4,000. And with the fact that we got a rate hike staring us in the face, I can't imagine that they're going to do it in the face of knowing that the Fed is coming out. So we may be slow again and really herky-jerky again tomorrow. But to downside, we got the story. We know what it is. Upside, we got the story, and we know what it's got to do. But let's see what happens, because it may just sit and do sideways until the Fed, until Meta comes out with their earnings tomorrow, along with the Fed. So we got the Fed at 2 o'clock. We got Meta at after 4. All right, so I'm going to leave it right there. Confusing. We got to try to just factor in. Just bear in mind to trade supply and demand. Bear in mind just to trade technically. Use the market profile. Use your points of control. Use your value area high, your value area low, the extended, the naked. Find out what they mean. A naked point of control just means it was set, but it was never broken. Therefore, it just extends over and over until the market eventually does get to it and take care of it, because it's unfinished business. Same thing if they're going to go up and it's going to fulfill the an extended value area high. It hasn't been challenged, so it remains there until such time as that it gets taken care of. Once it's done, then it goes away. But it'll remain as a point that was visible and calculated prior. And most of the time, the market will actually get there eventually, unless the whole trend changes and then it's just left. It's just left up there. So think about that. Think about putting all that together, and then we're gonna see what tomorrow will bring. Our next update will be on Wednesday, the 27th.